And the IPO of Groww, which is, the parent company's Billionbrains Garage Ventures, is opening today. So close to about 6,600 odd crore IPO. The anchor book, of course, saw demand of about 15 times. It was about 3,000 crores, and close to 50,000 crores is what the demand was from anchor investors. Ishan Bansal is with us. He's a whole-time director and chief financial officer at the company. Ishan, good morning. Good to have you with us here. Thanks very much for joining us. I think our viewers many of them would be very familiar with your business. Many of them perhaps would be using your platform. And it's been a remarkable journey from 2016 when you started to where you are now, and the valuation, etc. So big wealth creation for early investors. I just want to start by asking you, Ishan, if you can give us a sense of, FY25 at a net level compared to FY24, there has been a big turn. So from 800 odd crore loss, we're at about 1,800 crores in profit. I think this one-time expense in terms of compensation to promoters was expense last year. Will the company now stay profitable in the coming years? If you can provide us with some guidance at a net level, at a PAT level, going forward. Let's just start there.
Yeah. So I want to first explain what happened in FY24. There were one major event, which was our coming back to India from US, where there was a merger between our US entity and the Indian entity. And because of that, there were a lot of restructuring that happened. And one of them led to the loss of roughly 400 crores 800 crores in that year. It has a mix of two things. One, we paid a tax of 1,340 crores for this merger. Second piece was there was a one-time payout to founders from a ESOP settlement perspective, because we as founders had ESOPs in US. And when we came to India, because of our regulations on the promoter side, we were not able to kind of hold ESOPs. And hence, there was a one-time settlement for those ESOPs. And just want to add further to this is basically that in FY25, company actually, we as founders invested in the company again. And some of the proceeds that we got from that time was actually helpful to kind of increase our stake in the company as well. For the forward, from a profitability perspective, we are highly profitable. We are roughly at a 45% profit margin. And we think if we can keep on growing our revenue, we can even increase this percentage further.
Would you be able to provide us with some kind of, growth guidance, revenues and net earnings? At what rate? Broadly, and we won't hold you to any numbers. We'll talk more when you make it to the market, actually, and maybe you can be more specific. But generally, what should we expect?
So typically, the way we look at our business is our business grows or the revenue is dependent on how many customers that we have. And we keep on acquiring the largest chunk of the customers in the market. And the second piece is the ARPU, the revenue that we generate per customer. I think we've been seeing growth on both sides. It's just that sometimes the users grows faster and sometimes the ARPU grows faster. Between both of them, we are able to deliver 25 to 30% kind of a growth rate on the base effect basis. But obviously, the new products that come in also helps in increasing the ARPU. Our cost typically grows between 15 to 20%. Hence, there is generally a margin expansion, with the exception on times when there are some impacts coming from one-time issues like what we discussed just in the previous question.
Okay, all right. Hi, Ishan. Good morning. Nigel on this side, and welcome to the markets. We look forward to interacting with you as well as your team in the time to come. A couple of details is what I want out of the way. One is on brokerage revenues. At the half-year mark, what is it in comparison to last year? If you could just help us out with that. Point number one. Point number two is on your MTF book. It's grown, a large extent, and you'll get interest on that as well. So how do you see the trajectory with regard to the MTF book on both these two, MTF as well as brokering revenues? Please go ahead.
Brokerage as a revenue, as a percentage, is relatively lesser from a H1 perspective because of the MTF piece that you just said. Q1 revenue is already out of which the brokerage revenue contributes more closer to 83%. MTF as a business has started contributing 3% in Q1, and I think on a full year basis is significantly higher than that. And hence the broking revenue will, as a percentage of total revenue, will reduce a little bit. But what we are seeing is every product that we launch new, especially MTF, and now we recently launched commodities as well, is able to actually scale much faster, and hence our revenue growth has a extra lever with every new product that we launch.
Right. Ishan, Mangalam here. I just wanted to commend you on the valuation of this IPO, because you last valued at close to 58,500 crores, and now at the upper end, you would be about 61,000 crores. So between the 6 months, the jump hasn't been as much. And even if we compare it to some of the listed peers, vis-a-vis your growth, it is, the price earnings to growth ratio, the PEG ratio, is fairly similar. I wanted to understand, beyond brokerage, the diversification that you're doing, of the 1,000 crores that you're raising as fresh issue, a large part will be going into growing your NBFC book as well. You had earlier indicated that wealth management, NBFC and commodities could be big growth drivers for you. Over the next 3 to 5 years, how big do you expect these businesses on an individual basis to be? If you could give us some absolute data on that one. I mean, how big do you expect your NBFC loan book to be? How big could the wealth management book be for you, and commodities?
So the way I think there are actually 4 components. One, which is going to be the fastest growing piece in the near future, is the MTF piece, which we already talked about. So it will probably start contributing in double digits soon. And the reason is MTF, if you look at today, our book is around 1,000 crore, which is roughly 2% of the market share. But if you look at our ADTO market share, we are closer to like 30%. And hence our fair share there is like 13,000 crores. I think we will take few years to reach there, but I think that is where we want to reach in a medium to longer term from a market share perspective. Similarly, on the wealth side, we have just did an acquisition of Fisdom. And Fisdom acquisition itself got roughly 3 to 4% of our revenue. And going forward, our expectation on that business is to grow much faster, because again, it's at a lower base, and we have already roughly 3 lakh odd customers who are in the affluent category already on the Groww platform. And we can help them with more products from the wealth side. And there will be revenue that we will generate from the wealth business. And our expectation is, again, that business also will start generating double digit in few years. On the third piece, which is the lending piece, it already is reasonable size business. We are roughly around 1,200 crores of balance book on that side. But what we have launched recently is a loan against securities as a business, which is a separate product for our customers, especially for the affluent category. Where customers already have AUM, and they can use their AUM to actually reduce their credit cost as well. And hence, that business will grow faster. And our expectation is that in next few years, that business will be bigger than our personal loan business as well.
Ishan, a bunch of more questions, but we are out of time for now. Good luck with the issue to you and, of course, the other founders as well. And the mind boggles sometimes, right? I mean, you guys started out with the business in 2016. Yes. I mean, it's not even 10 years. And, I think Groww is what you've done in a phenomenal way. And I'm sure there'll be many more businesses. I mean, I think when you guys started, there were some 50 lakh investors. There are now 12 crore unique investors. And I guess financialization of savings is this big theme, which the wave on which you've ridden, and I think there's more to come. Thank you very much for joining us. Good speaking with you. Appreciate it.